as far as what happened with Archegos, it is not, it's amazing that it hasn't happened more, because essentially what is allowed to happen is that these family offices that do not take any outside money, that have a lot of high net worth individuals in the fund, really do not follow the same guidelines, the same regulations, SEC guidelines, as others do. They get special privilege. One of which, of course, is to be highly leveraged, as they were, 5 times more leveraged as they were in Baidu and Viacom and Discovery and a few others. So the question is, in terms of the comparison, I like actually the comparison even more of what happened with GameStop this year, because even though it was funds and not necessarily family office funds, it just goes to show you that when you're a high net worth, you can go 140% short in a company like GameStop. So I think what this really does is it brings out a lot of these incredible distortions in the market that we have seen throughout many years, not just in the last 10 or even 20 years. And so I think that's good. Maybe what will happen at this point is that it'll force the SEC to come in and look at these incredible distortions and try to make some changes that rein in these companies that basically have been able to get away with doing exactly what they've done. In the case of Archegos, it's almost mind-boggling that somebody would be buying so much high leverage of stocks that had already made huge moves, number one, and particularly in the case of Viacom, without any type of controls or anything like that. Just from a trader's standpoint, it makes you wonder how somebody like that could have that level of responsibility. But in terms of the impact of the overall market, it has spooked the market a little. Could it happen again? Absolutely, it could. Will this ultimately, though, bring to light for the regular, normal retail investor some restrictions from Wall Street in terms of what people can get away with, like highly leveraging either on the long or the short side? We hope. The other interesting situation that came out of it, of course, was the banks that lent them money when they went on margin, that also are taking hits. First they said about $2 billion, now they're saying it could be $5 billion or more. You would also think that maybe these banks would get a clue as to lending money, billions of dollars of money, to these family offices or these crazy hedge funds that will totally take advantage of the system by being way too leveraged. So we'll see about that as well. As of last Wednesday, the SEC adopted a law called the Holding Foreign Companies Accountable Act. That's a mouthful. And essentially what that law says is that companies in China will have to show that they're not controlled by the government and have to identify their board members who are, if they are part of the Chinese Communist Party. So that makes it very dicey for getting into these companies, because we know a lot of the large companies are in part owned by the government and in part are part of the Chinese Communist Party, because that's how China is run. It's sort of a communist government, but yet a democratic terms of how they're trading. And it makes it very complicated. So if this is the Biden administration's attempt to try to rein in China and they decide to really go through with it, that would not be a good thing for these particular companies, and it would not be good for the market. Every time you chip away at more regulation and you take something away from the free market, it's a knock to the overall market, I believe, because what it does is it puts fear in investors' minds. As far as whether or not this actually does get carried forth, we'll see. We know that there's always been threats by the government, especially when it comes to China, like with the last administration with the trade war, which actually wound up hurting the United States more than China in some ways. But I don't know. I mean, I have to say, really honestly, I don't know what's going to happen with this. I'd probably avoid getting into those stocks right now until we see what happens, if there's any kind of follow through. But that's a threat. It's a real threat. I mean, the thing that we have that's most comparable to that are the antitrust suits we've had in the United States with Alphabet, Google, Apple, Facebook, the threat constantly of being under the scrutiny of the government for antitrust violation. And yet nothing goes on, and we still have Facebook actually trading near all-time highs, and Google's holding up well. So it's possible that the reason why nothing has happened is because of lobbyists. I don't really, I wouldn't say I don't understand the political process. I do know lobbyists are very powerful. I just don't know how much lobbying there would be by these big institutional investors to keep the Chinese stocks listed. I'd say it's very, very possible. If you are already, it sounds to me like the bigger question is if you're already involved in these particular instruments, like, for example, if you're already in Baidu or Alibaba or JD.com, those are the ones that are really being targeted here. I would probably, well, again, it depends on where you're long from. If you're just investing recently, that would probably be not such a good thing. But if you're invested from a while back, and you have profits in these things, again, let's go back to our first conversation, is you should have some level of risk control in there and maybe stay aside if you do not already have a position. I know with some of these large funds, they have a lot to unravel. And obviously, I would think that that could have an impact on the market. But so far, I haven't seen evidence of it. Baidu is down because of MarketGauge and not because of this new adopted law. I just want to go back to the question you asked me last week when you said Mr. Lee was expecting a 90% correction. Remember when we talked about this last week? And my response was, predictions are predictions, right? I mean, they mean absolutely nothing. There's just another person's opinions based on whatever analysis or whoever's paid to have them make that prediction. I mean, we know a lot of, just using a comparison, economists are often giving the view of the economy based on who's paying them to have that view. So I always take that with a grain of salt. With that said, yes, we should understand that Bitcoin is currency. That's the actual currency. And Ethereum is the mining part and deals with the blockchain. And I think I had expressed to you all last week that I was interested in Ethereum. It took a nice trip down a little bit, but as it's been trading here in 2021, every time it makes a dip lower, it actually makes a higher low, which means that not only is there buying on that dip, but it's showing that it's building up momentum. So I do believe that Ethereum, right now, we're actually long Ethereum through the trust, ETHE. It's a grayscale trust. It's not an ETF. Yeah, I think that to me, blockchain technology is still the thing for the future. It's a tremendous instrument. It's very, very effective. And so I still think the future for not only alternative currency, today we had the big announcement by PayPal that they can pay a lot of stuff in Bitcoin. Again, that Chipotle, which is do you know what Chipotle is? It's a restaurant chain, said that they were giving away $200 either worth of burritos or Bitcoin. Okay, you want so I don't see this. I think people should just calm down about this and realize that, like any other market, it's going to have gyrations, and like every other market, you should have a plan. You should have risk parameters and ideas where you're taking profits. Right now, I'm looking at Ethereum to hold about 1780. If it can get through this 1840 level, maybe it gets through 2000, which is the highs, and goes on from there. That's kind of what we're counting on.